Let me tell you something that surprises almost every buyer that I work with here in Houston. The mortgage is not the only expensive part. If you are shopping for a home at $300,000 to $500,000 or anywhere in between, you need to understand what gets added on top of that payment before you know whether this house actually fits your budget. And most people only find out after they've closed. I'm Marcela Amador with Home Central Real Estate. I'm an agent, a builder, and an investor. And today I am walking you through the true monthly cost of owning a home in Houston in 2026. Property taxes, homeowners insurance, mud districts, and the one tool that can actually lower your bill. So let's get into it. The problem with list price. Here is a conversation I have with almost every buyer before we start touring homes. They come in with a mortgage payment in mind. They have done the math on principal and interest. That number feels about right. And then we sit down and run the actual monthly cost. And it is often about $700 to $1,200 higher than what they expected. Well, guess what? This is not a small gap. That is a car payment. That is a difference between a house that works and one that puts you under pressure every month. In most American cities, property taxes and homeowners insurance are line items in Houston. In Houston, they are major budget categories. And if you do not underwrite for them from the very beginning, you will be surprised, and not in a good way. So let's put real numbers on it. The property taxes. Property taxes in Houston are set by multiple taxing entities layered on top of each other. The city, the county, the school district, and sometimes additional special districts. The combined effective rate on most Houston area homes falls somewhere between 1.8 and 2.5%. And in some areas it goes higher. What does that mean on a $300,000 home? Well, at 2%, your annual tax bill is $6,000, roughly $500 a month. At 2.5%, that bill becomes $7,500, about $625 a month. And at 3%, you're looking at $9,000 a year, $750 a month. And this is before you factor in insurance. Now, here is the thing about Houston that a lot of people do not realize until they have already bought somewhere. Two homes priced at the same amount, similar size, similar neighborhood feel, can carry two very different tax bills depending on their specific taxing setup. That is why I always pull the full tax history on every property before we make an offer. The address does matter more than the city average. Speaking of taxing setups, let me explain something called a MUD, because if you are shopping in any of the newer Houston suburbs, you are going to run into this. MUD stands for Municipal Utility District. These are special taxing districts created to finance infrastructure, water lines, sewer systems, drainage, in areas that are not served by existing city utilities. A lot of the master plan communities in Katy, Cypress, Pearland, and the outer suburbs were built inside MUDs. The issue for buyers is that MUD tax rates stack on top of everything else, depending, of course, on the district. A MUD can add 0.5% to 1% or more to your effective tax rate. That can be the difference between carrying a home comfortably and stretching it. Then, I am not saying avoid MUD communities. Many of them are beautiful and well maintained. I am saying know what you are buying before you commit. Houston homeowners insurance. Now let's talk about this area, because this is the one that really catches people off guard right now. Houston's insurance market has been under significant pressure for several years. Hurricane exposure, flooding, hail, and the rising replacement costs have pushed premiums up considerably. Some carriers have pulled back from Texas entirely. Recent reporting places the average Houston homeowners insurance premium at about $5,653 per year. That works out about $471 a month. And that to a $500 per month tax bill, well, you're already at $971. before one single dollar of principal interest is paid. At the high end, a 2.5% tax rate plus current average insurance, taxes, and insurance combined can run $1,096 per month. At 3%, you're looking at over $1,200 in carrying costs beyond the mortgage itself. And this is why I tell every buyer I work with, do not start with the list price. Start with the total monthly number by address using actual quotes. The Texas homestead exemption. Now here's the good news, and it is genuinely significant. If you plan to live in the home you buy, Texas offers a homestead exemption for owner-occupied primary residences in Harris County. This does three important things. First, it removes at least $140,000 of taxable value from your school district tax calculation. On a $300,000 home, that's no small reduction. Second, Harris County currently provides a 20% optional exemption on county taxes for qualifying homeowners. Third, and this is the one that becomes very valuable over time, the homestead exemption activates what is called the 10% appraisal gap. Once you have the exemption in place, the taxable value of your home cannot increase by more than 10% per year, plus qualifying improvements, regardless of what the market does. In a rising market, that cap can save you thousands of dollars over the years you own the home. The exemption does not apply in your first year tax, in your first year of ownership. So model year 2 numbers when you are running your budget, but file for it as early as you are eligible. 3 rules before you make an offer. I want to leave you with 3. That will make you a much more informed buyer in this market. Rule number 1, underwrite by address, not by city average. Pull the actual tax bill for every home you are serious about. Do not assume because 2 houses are the same price, they cost the same to carry. Rule 2, get an insurance quote on the specific property before you decide what you can afford. Coverage and premiums vary significantly by location, age, structure, and flood zone status. A real number from a real carrier is the only number worth budgeting around. Rule number 3, model year 2 ownership. If the seller has had a homestead exemption in place for years, their taxable value may be capped well below current market. When you buy and reset your tax bill in year 2, your tax bill in year 2 can be meaningfully higher than what they were paying. I always walk my buyers through this before we actually write an offer. Here's the bottom line. A $300,000 home in Houston can absolutely be a sound, affordable purchase, but the buyers who go into it clear-eyed, who know their full monthly number before they fall in love with the floor plan, are the ones who feel good about it 5 years later. The buyer who finds out after closing, well, they often don't. If you are getting ready to buy in Houston and want someone who will walk you through the real numbers, not just the mortgage, DM me on Instagram at Marcela Amador Realtor, or call or text at 832-701-4181. I am happy to sit down with you before you start touring and make sure you are shopping in the right range for the right reasons. I will see you in the next one.